Making money in the stock market can be a challenging yet rewarding experience. It's a long-term strategy that requires patience, knowledge, and a solid plan. In this video, we will provide you with a beginner's guide on how to make money with stocks. Step 1. Educate yourself before investing in the stock market. It's important to understand the basics of investing and the stock market. There are many resources available, such as books, articles, and online courses. Take the time to learn as much as you can before investing your money. Investing in the stock market can be intimidating for beginners, but it doesn't have to be. There are plenty of resources available to help you understand how the stock market works and how to invest. Here are some of the key concepts to understand. Stocks. Stocks represent ownership in a company. When you buy a stock, you are buying a share of ownership in that company. Stock market. The stock market is where stocks are bought and sold. It's a place where buyers and sellers come together to trade stocks. Stock exchange. A stock exchange is a marketplace where stocks are traded. The most popular stock exchange in the United States is the New York Stock Exchange, NYSE. Bull market. A bull market is a market that is on the rise. Stocks are generally doing well, and investors are optimistic about the future. Bear market. A bear market is a market that is on the decline. Stocks are generally doing poorly, and investors are pessimistic about the future. Step 2. Choose a broker. Once you're ready to invest, you need to choose a broker. A broker is a firm that facilitates the buying and selling of stocks. There are many online brokers to choose from, such as Robinhood, E-Trade, and TD Ameritrade. Each broker has different fees and features, so it's important to compare them before choosing one. When choosing a broker, there are several factors to consider. Here are some of the most important ones. Fees. Different brokers charge different fees for buying and selling stocks. Make sure you understand the fees before choosing a broker. User interface. The user interface of a broker's website or app can be an important factor. Make sure the user interface is easy to use and understand. Research tools. Some brokers offer research tools and resources to help you make informed investment decisions. If this is important to you, make sure to choose a broker that offers these resources. Step 3. Create a trading plan before investing in stocks. You need to create a trading plan. This plan should include your investment goals, the types of stocks you want to invest in, and your risk tolerance. Having a plan will help you make rational decisions about buying and selling stocks. Here are some questions to consider when creating a trading plan. What is your investment goal? Are you investing for retirement, a down payment on a house, or something else? What is your risk tolerance? How much risk are you comfortable taking on? Are you willing to invest in riskier stocks for potentially higher returns, or do you want to stick with safer stocks? What types of stocks do you want to invest in? Do you want to invest in large-cap stocks, small-cap stocks, or a mix of both? What is your investment time horizon? How long do you plan to hold onto your stocks? Once you've answered these questions, you can create a trading plan that works for you. Step 4. Invest in individual stocks or ETFs. Once you have a trading plan, you can start investing in stocks. You can choose to invest in individual stocks or exchange-traded funds, ETFs. An individual stock is a single share of a company that you buy and hold onto, while an ETF is a collection of stocks that tracks an index, such as the S&P 500. Investing in individual stocks can be riskier than investing in ETFs because the performance of a single stock can be affected by many factors. On the other hand, ETFs provide diversification, which can help reduce risk. When choosing individual stocks, it's important to do your research and choose companies with strong financials, good management, and a competitive advantage. Look for companies with a track record of steady earnings growth and a history of paying dividends. ETFs can be a good option for beginners because they provide diversification and are typically less risky than individual stocks. ETFs are also less volatile than individual stocks, which can make them a good option for those who are risk-averse. Step 5. Monitor your investments. Once you've invested in stocks or ETFs, it's important to monitor your investments regularly. This includes checking the performance of your investments, reviewing your trading plan, and adjusting your portfolio as needed. Monitoring your investments can help you make informed decisions about when to buy and sell stocks. It can also help you identify potential red flags, such as declining earnings or poor management. Step 6. Stay patient and disciplined. Making money in the stock market requires patience and discipline. It's important to stick to your trading plan and avoid making impulsive decisions based on short-term market fluctuations. Market fluctuations are normal, and it's important to remember that investing is a long-term strategy. By staying patient and disciplined, you can avoid making costly mistakes and increase your chances of long-term success. Making money in the stock market is not a get-rich-quick scheme. It requires patience, discipline, and a solid plan. By educating yourself, choosing a broker, creating a trading plan, investing in individual stocks or ETFs, monitoring your investments, and staying patient and disciplined, you can increase your chances of success in the stock market. Remember to always do your research, invest in companies with strong financials, and stay focused on your long-term goals. If you like this video, hit the like button and subscribe this channel for more videos like this. Thanks for watching.